Once again, today we are going to talk about end of year adjustments. When you talk about end of year adjustments, what comes into your mind? Of course, like here, the definition is saying these are changes made to accounts to get them accurate before finalizing financial statements. Of course, when you talk about in short terms end of year adjustments, these ones are like accounts that you finalize. For example, maybe you have expenses, but those expenses can be like rent. Under that rent, maybe you paid rent for 2 trading periods, but remember, you're preparing for one financial trading period, so you need to account for it. Maybe you received income for 2 trading periods, but remember, right now you're preparing financial statements for one trading period or 1 year, so you need to adjust. You need to work on it and make sure that you're remaining with one maybe transaction for that trading period. So we are going to look at some those are some are expenses and others are income. So we are starting with one we are starting with the first one. Let us look at accrued. Can call it accrued, can call it owing, can call it outstanding, outstanding, expenses. Those are common names that they always ask for. Yes, when you talk about accrued or outstanding expenses, what does it mean? These are expenses incurred by entity. These are expenses incurred by entity or business but not yet paid for. Yes, when you talk about these expenses, for them you can use them, but you have not yet paid for them. For example, you can use rent for two years, yet you are paid for one. That means when you are preparing financial statement for that trading period, you will account for 1 year. You don't consider the other one. That means when you are preparing, it is still your obligation to pay that rent. It means that trading period, you will add that accrued rent. Then when it comes to financial position, you put it under current liabilities because it is your obligation. You have already used it, but you have not yet paid it. Yeah. So that means if you use for 1 year, if you use for second year, still you continue adding it into a trading period because anytime you'll pay it. When you use for third year, the same, you add it. So this accrued this these accrued expenses in income statement in income statement, they will increase the value of expense. Yeah, if it is rent will increase because you have added another expense, maybe for last financial year or for any. So that is your income statement. Then financial position. In the financial position, that accrued or outstanding or owing, it will be recorded under current liability. Because that is your obligation. You have used expenses or you have used something but you have not yet paid it. It's the obligation. Anytime you pay it, that's why it is recorded under current liability. Now we are going to try some example and we see how it is applied, how these accrued expenses are applied. So let us see. Let us take one of, for example, we are going to see how they treat the accrued or owing outstanding. So when you check, we have our transaction here. They have said salary or set is 20,000. Then at the end of the period, these are accrued. Most of the time they are always in additional information or at the end of the period. So at the end of the period, the end of trading period, or sometimes it is always in additional information. So most of the time when you check in additional information, that's why they always bring the things for accrued expenses, outstanding expenses, owing expenses. So here under additional information, they have given us accrued salary. Accrued salary was 5,000. So now we are going to see how it affects or how it is treated in income statement and also the financial position. Now let us see. Let us apply it. So of course, at first you are going to have your income statement. As you know, income statement, you start with the name one. They say maybe XT income statement for the period ending or for the period ended. Then you follow the format. You start with income. Where I start with sales, you get cost of sales, you get cost, gross profit or gross loss, add incomes, then you go to expenses. But when you check here, they have told us in income statement, they have told us in income statement, accrued expenses increase the value of expenses. So assume here for us, we are assuming we have calculated net sales. Okay, we have got gross profit. Now we are going to expenses. So under expenses, we are going to have our salary, which is 20,000. We add accrued expenses, accrued salary, which the offset is 5,000. It is 5,000. So when you get salary of 20,000 plus accrued, we are going to get salary of the year or the total salary. Here our total salary is going to 20,000 plus 5,000. You will get 25,000. So in short, so this is our accrued or owing or outstanding expenses. That is how it is treated in income statement. We have got the salary for the year. We have added salary at the end of the year, or accrued or owing to get our total salary. And remember, we have said for accrued salary, you add, it increase the value of, it increase the value of expenses in income statement. Then in the financial position, it is recorded under current liability. So let us see how it is treated under financial position. So when we go to our financial position, financial our financial position. When you talk about our financial position, of course, we start with assets, get to assets, go to owner's equity, then you go to our liabilities, then you go to current liabilities. But right now, for us, our focus is under current liabilities. So here you come, say current liabilities. Of course, under current liabilities, we have trade payables or creditors, we have short-term loan, a loan that is less than a year, we have others. So here we are going to come and say accrued owing rent or outstanding rent. We're going to say accrued salary. It depends. When they give you owing rent, you'll be using rent. When they give you accrued rent or accrued salary, it is the same. Or owing, it is the same. So here we're going to say accrued salary. It is how much? 5,000. Then you enter other transactions. So that's how they treat accrued or owing or outstanding. Remember, we have said accrued expenses or outstanding expenses or owing expenses. We have said these are expenses that incurred by the entity or business but not yet paid. You use services, but at the end of the period you have not yet paid for them. That means they will be added on the other expenses. that you have used it. So that is our accrued expenses or owing expenses. Yes, yes. Equal